truth is that not everyone makes money in the crypto market. Harsh to say, but that is the truth, because most traders out there keep looking for technical indicators, support, resistance, moving averages, and yet are not able to book big profits because they tend to miss one of the easiest yet the most powerful on-chain indicators: whale movements. Literally just following the smart money. If you want to gain an edge over an average trader, you've got to keep a pretty close eye on what the whales are doing, their activities, their behavior, their feeding rituals. And so in that spirit, in this video, we are looking at 4 hot altcoins that the whales specifically are massively accumulating right now. Welcome to the channel. My name is Maddie. This is Altcoin Buzz. Maybe you're a whale. Maybe you're a minnow. Maybe you're somewhere in between, like 99.99% of us. If you choose to invest wherever you are on the spectrum, I do wish you all the very best of luck. But just remember, I am not a professional financial or investment advisor. As you know, this video is not official financial or investment advice. Okay, before we get into those whale patterns here, a little bit of context and pretext for this video. We have to talk about the Ethereum Shanghai upgrade. And the reason we're talking about it is because whales are currently buying liquid staking tokens. Now, as you may know, this upgrade, which is set to happen sometime in March, is a big deal. In essence, liquid staking platforms have accepted ETH for staking purposes since way back in late 2020, knowing that a move to proof of stake was coming. That is a long lockup. And so Shanghai will allow validators to withdraw ETH from their stake, and that comes based on EIP 4895. Now, you may remember that 32 Ether were required to stake, and for many small investors, of course, and understandably, that's a lot of money. So many delegate their ETH to different platforms, including the liquid staking platforms on this list, because they let you keep your locked stake, but give you a liquid token you can invest elsewhere. So who benefits when you can withdraw? Well, besides investors generally who now can do what they want with their money, 2 groups specifically benefit. Number 1, centralized exchanges, and number 2, liquid staking platforms. Centralized exchanges like Coinbase and Binance stand to gain massively from this development. All the exchanges have ETH staking pools, and once all that capital is free to move, many, of course, will move it. And moving money generates transaction fees. Coinbase and Binance stand to earn hundreds of millions of dollars in transaction fees alone. It is a major windfall for them. And liquid staking platforms are going to gain as well because they had to invest in all the validator and node technology for almost 2 full years, really since late 2020 until the merge, which occurred in the fall of 2022. They did that without earning anything on that investment. But now they're going to be able to earn transaction fees for moving funds in and out of their staking platforms. So look, when you think of it this way, the idea that ETH whales are interested in liquid staking platform tokens makes more sense. They're simply more aware of ETH platform upgrades and perhaps more importantly, the effects those upgrades will have. And they're more aware of that than anyone else, aside probably from the ETH developer teams themselves. With all of that in mind, let's launch right into coin number 1 on our list. It is Lido, which is the most popular liquid staking option for Ethereum right now. Almost $8 billion worth of ETH is staked there. That's about 1/3, by the way, of all staked ETH. So it's a huge number and it's a huge proportion. If there were a proxy for all the locked, staked ETH waiting for withdrawals, then Lido is pretty much it, which makes it an important project both for Ethereum and for liquid staking more generally. And they stake on other chains too, Polkadot and Kusama, for example, Solana, and Polygon. So these are some of our favorites. And they play an important role in getting people to stake to keep their favorite projects secure while also having liquidity for other investments. Lido, by the way, also runs nodes and other important infrastructure, and that makes it a very good Web3 infrastructure play. And just to make sure that we're not confusing anyone, the token that the whales are buying right now is not Lido staked Ether, whose symbol, by the way, is STETH. Instead, again, I want to be clear about this, the whales are accumulating the Lido DAO token as Lido operates as a DAO. So that's shown here, Lido DAO, ticker LDO. It just so happens to be up 23.4% on the day, not too bad. But again, this is not a bet on how the liquid staking derivative will do. It's a bet on the platform itself. And after hitting a low of 90 cents back in November, Lido really has been climbing steadily. and well. It's up more than 100% from that point to now its mark of $2.59. The last couple of months, maybe 6 weeks in particular, have been great in terms of upward price trajectory. But even at that, it's still down 66.5% from its all-time high in 2021, August of that year, of $7.30. So it's still got quite a ways to go. Altcoin number 2 that whales are picking up aggressively right now is Rocket Pool. And like Lido, Rocket Pool is a liquid staking platform. They're smaller than Lido, but have nearly $1 billion in staked ETH on their platform. So that's not too bad. And like Lido, they also give you the infrastructure, so you can stake your own 32 Ether if you have it, and then you can run a node there. Or the more popular option is that you delegate to them. The liquid staking token that you get here is RETH, and while not as widely available as STETH from Lido, you can use RETH in lots of places, including Yield Protocol, and in lots of pools and farms to earn even more interest. Pendle has a terrific pool right now of RETH and WETH, which means risk of impermanent loss is almost zero. It is paying a boosted return of 41% right now. And that's just really one of a few good deals using RETH as collateral. But like Lido, again, and I know I sound like a broken record here, the whales are not buying RETH. They are buying the platform token, whose symbol is RPL. So again, specifically, whales are accumulating Rocket Pool itself, ticker RPL. We're looking here at the last 6 months of price performance, and after hitting its bear market bottom of $13.32 in early November, Rocket is up more than twice that amount to now $42.26. So about a 50% return from here will get Rocket back above its all-time high of $59 from the last bull market, assuming the trend will continue, and we feel that it will. Said differently, it is still down 29.1% from that all-time high. Let us know, guys, if you like using liquid staking platforms. If so, which ones have you used? Which ones do you prefer? Which ones do you avoid? Let us know in the comments below. Coin number 3 on our list for today that whales are accumulating is FXS, where you get FRX ETH for your Ethereum. Frax also has one of the most ambitious stablecoin projects in crypto. Its goal is to take all the best aspects of algorithmic stablecoins and use them with the safety of collateral-backed coins. Its stablecoin is called Frax, F-R-A-X. By the way, it's also the only coin on this list not involved with liquid staking. And I can understand why that may sound confusing, but many people like the mint burn mechanism and potential decentralization of algo stablecoins. But as we just saw with UST, most of them do have significant design flaws. And so to prevent a bank run style sell-off like what happened with Luna, Frax also backs its coin with USDC. You can see exactly how much USDC is behind the coin and how decentralized it is right now on the Frax dashboard. Today, as I record, it's backed 92% by collateral. And using the minting feature by burning FXS, as algorithmic coins do, we see that it's 23% decentralized right now. Just like UST had with Luna, you either mint or burn FXS to create the Frax stablecoin. And it's this coin, FXS, that whales are buying. Looking at the last 6 months, FXS has some terrific performance to show off, but it's still down 69% from its all-time high of $42.80 in January of last year. And for reference, the current price of Frax Share, ticker FXS, sits right now at $13.19. Clearly, the whales are bullish on this stablecoin because to create more Frax stablecoin, you have to burn FXS, which means you're removing the supply of FXS. And so whales are rightly and logically thinking that burning will add value to the token by reducing the supply that they are buying. Last but not least on our list at coin number 4, we're looking at StakeWise. Here, just like the others mentioned today on our list, you stake your ETH and you get a liquid token. In this case, the liquid token is SETH2. Of the 3 liquid tokens, this one has the fewest investment options, but there are still some good ones, including 2 pools that StakeWise offers. One offers almost no impermanent loss risk, and it's an ETH SETH2 pool on Uniswap, paying a healthy 12.71%. That is a great deal. Another one involves an ETH derivative token, RETH2, And the pool is RETH2 SETH2. This one is also on Uniswap and pays 12.68%. These are excellent returns for the risk you are taking. Risk here is very low since both get their value from the underlying Ethereum. And just like Lido and Rocket, the whales are buying StakeWise's SWISE platform token. That's SWISE. The whales are not buying the SETH2 liquid token. Again, whales are accumulating SWISE, which is up nearly 25% today alone. This one is the smallest of the liquid staking platforms with a market value of only $37 or so million, but it does have a lot of room to grow. And if you think liquid staking and delegating ETH staking will continue to grow, as I do, then this is probably a good play. The price performance of SWISE has been absolutely terrific lately. We're looking at the 24-hour chart. And zooming out a little bit more, you can see that it's really had a great couple of weeks. But zooming out even further to 180 days, so 6 months or more, despite the current performance, as impressive as it may be, it should still be noted that this project is down about 48% from its all-time high in October of 2021. That's when it reached 35 cents. Again, we currently sit at about 18.5 cents. So it's a great project that still has plenty of room to achieve new all-time highs.